Today, we're going to talk about something that should be easy. In fact, the easiest thing in the world, you would think, would be to follow a trend in the market. And yet, most traders find that the most difficult thing to do. So today, we're going to spend our time looking at trends and how to trade them. We're going to talk about what creates a trend, why a trend is there. We're going to talk about how to use stops in the trend, whether you feel real confident or not so confident. And we're going to talk about how to trade the trends outside the Elliott wave and trade the trend using the Elliott wave. Here we are at the slides, and our goal for today is to learn more about trading in that best of all trading places, a trending market. And remember that a trending market should be the easiest place to trade, but for most of us, we find it very, very difficult to follow the trend. Let's define what a trending market is. First of all, the best definition, and the most easiest one to see immediately, is that it stays out of the alligator's mouth. Number two, the pullbacks are less than the thrusts. Obviously, it couldn't be a trend unless the thrusts were greater than the pullbacks. And it will contain more green bars in an up market, and obviously in a down market is going to have more red bars in it. Let's take a look at an actual market itself. Here's the daily chart of the S&P, and we've seen this chart before. You remember this is the big run-up between February and the middle of April. And notice that in a trend, the price bars tend to stay outside the alligator's mouth. Remember that our first fractal out of the mouth was where you would have gone long, and as long as the markets, the prices, are outside the alligator's mouth, then you know that you're in a trend. Not only do you know you're in a trend, you also know that you are in an impulsive wave, in an Elliott wave. Note that up here at the end, though, the alligator's mouth is beginning to close. Now, you know from past lessons that means that the trend is probably coming to an end. And so you would look to get out and you would look to take profits as quickly and as easily as you could. Let's take a look now at how we would do that. In any uptrend, also, we'll have more green bars and red bars. And again, this has to do with the thrust and the pullbacks. And in a downtrend, you'll have more red bars than you will have green bars. The problems of trading a trend is twofold. Number one is when you get in, and number two, and more difficult, is how do you handle pullbacks. You must make an executive decision whether or not you're committed to this trend. Now, if you're committed to the trend and you have confidence in your position, obviously you're going to have a much more staying power than if you're not. In the market, they call these the strong longs or the strong shorts, and those who don't have that ability are called the weak longs and weak shorts. And on the floor, you'll oftentimes hear them talking about we have to get the weak longs out before we can go short, and vice versa. Let's look at this same chart again. And if you're committed to the long term for all kinds of reasons, then you would probably want to use the furthest back stop, and that furthest back stop is the red line, as you know already. Another stop is at the green line, and then you have the 5 consecutive bars, and you have the signal in the opposite direction. And you know all of these from previous sessions. So let's look at what trades to take in a trending market. You only take those trades that go in the direction of the trend. You don't take any other trades. If you do, you're feeding the alligator. And you consider making an executive decision not to add on the zone trades after 5 consecutive bars of the same color. We know that when you have 5 consecutive bars, you are in a good market, but a market has to breathe. So after 5 consecutive bars of the same color, we get very, very more cautious. We don't continue to add on the zone trades on the stop close onlys. For example, down here we had several green bars, but we only had 4. We had 5 green bars there, and the market did not take a breath, but it did not go lower. And then it took a breath up here. We had a bunch of gray bars, but notice that we had 5 red bars here. But we're above the alligator's mouth, so we would not be short by any means. Then we have more greens, a few reds, a lot more greens, a few reds, and more reds here. Notice in this area, we're having more red bars than green bars, which again, with the alligator closing its mouth, gives us an idea that perhaps this trend is going to be over. Then the next question, obviously, is where to place stops. And where you place the stops, again, depends upon whether you're a strong long or a weak long, or a strong short or a weak short. If you're a well-financed trader, if you're committed to the trend, if you have all the grounded assessments for staying in that trend, then it would be foolish not to follow the market. Remember that the Holy Grail is wanting what the market wants. You also have, and we all are this at one time or another, the scared, unsure, afraid trader. One of our rules here is that the most valuable commodity you will ever deal with in your life is your perspective. So you want to watch your perspective closer than any other market or any other commodity in the world. So if you're in an unsure, afraid place, you may want to just exit the market, get out, and come back when you're feeling better. Trading in a trend. There are 2 ways to trade in a trend. There's the Elliott wave, and there's trading without the Elliott wave. The Elliott wave is not a necessity. We've already pointed out that anytime the prices are outside the alligator's mouth, you're in a trend move, and when it's inside the alligator's mouth or going back and forth, you're in a reactive move. The Elliott wave basically is an ungrounded assessment, so it's an opinion. So we do not take any trades based on the Elliott wave itself. We have to have a grounded assessment. But if we know that we're at the end of a wave 2, then we would trade much, much more aggressively than if we thought we were at the end of a wave 3. So let's look at the Elliott wave. Here we're trading with the Elliott wave, and we're still looking basically at the same chart. And notice that we know from our Elliott wave count from the awesome oscillator, we know that we're at the end of a wave 3. We have divergence, we have the 5 magic bullets, and the alligator's mouth is closing. When you add all of that together, then you would anticipate the market going into a 4th wave. And again, remember that that's where 85% of all of our whiplashes happen. Now let's look at what happened immediately after this. Let's go further. This is where the first chart ended, when we were seeing all the alligator projections closing, and it went into a 4th wave. And for the months of April and May, if you were trading on a daily basis, this was an impossible market to make money in. So knowing where you are in the Elliott wave, the primary reason for that is to give you confidence to want what the market wants and to stay with the market, or to exit at a strategic position. So let's summarize what we've talked about today. And remember that tomorrow we're going to look at some real markets, real time, that are really happening as this is being videotaped. Today we talked about, number one, what is a trending market, and tried to get a little bit of insight into why it's difficult to follow. It should be easy, but it's one of the more difficult things. We talked, and that is the biggest problem in trading the trend. We also talked about what trades to take in a trending market, and obviously we do not want to feed the alligator, so we would only take trades in the direction the price is moving outside the alligator's mouth. And we talked about where to put stops in a trading market, depending upon whether you are strong long or weak long. And finally, we talked about trading with and without using the Elliott wave. The Elliott wave, again, gives you confidence, but if you don't want to bother with counting the Elliott wave, then go with the alligator. That's it for day 3 of week 11.